Oh yeah, we're going to the moon today, baby. Let's go. Ladies and gentlemen, thank you so much for joining me on today's video. I hope you didn't take the first image serious, as I really don't know if the merger is going to happen today. But if it does, then that would be wonderful. And also pretty funny too. So as many of you may know, my duty is to bring you the latest news, the latest rumors, and the latest speculations that may pop up on Reddit or Twitter or anywhere else. And if you're wondering what the links are, then you can actually find them in the description below. And since you're down there already, just hit the like button or something. But yeah, by hitting the like button, you're showing everybody that you still have hope that the merger will happen. And if you're wondering what the title of the video means, it's actually a reference from Game of Thrones. So remember to hold the door, ladies and gentlemen. But anyway, if you haven't seen any of my past videos yet, I definitely recommend them. One of these videos could possibly give you a new fact or rumor that you may not have heard of yet. And if you do enjoy my videos, then please go ahead and subscribe and hit the bell for notification, as I will be posting as soon as I possibly can to bring you the latest and greatest. But yeah, once again, most of my findings can't be done if it weren't for the news and also the Reddit and Twitter community. So for that, I thank you. And since most of you don't have the time to search the web, then please allow me to do this for you. I actually find it fun and entertaining. Alright, so let's go ahead and dive in. So today in the morning, CCIV opened the market with a price tag of $29.02. And throughout the day, we saw some small dips as well as some small spikes. But overall, we saw CCIV have an average of almost $29 to $30, which in my opinion is actually a great thing considering what happened yesterday. And if you're not aware of what happened yesterday, I actually made a video about it. I recommend that you should check it out, but you know, do it after you watch this video. But to quickly summarize what the video was about, there was a small, actually I wouldn't call it small, it was a huge mistake that came from Bloomberg, which caused a lot of investors to panic sell. Now some may consider this mistake to be intentional, while others may consider this to be strategical. Well, I personally believe they mean the same thing. Unfortunately, I can't give you my opinion because it could have been an honest mistake, but it could have also been intentional / strategical, because it does seem kind of fishy, since as soon as that dip happened, a $23 million purchase of CCIV was made. But yeah, if you haven't watched the video, check it out and let me know your thoughts. So I wanted to talk to you guys about this article. It comes from Investor Place with a headline that states, "Take your time with SPAC play Churchill Capital IV. SPAC CCV stocks surge on news of a possible merger with EV startup Lucid Motors. But be careful." This article was published on February 3rd, 2021 at 3:36 p.m. So the reason I wanted to talk about this article with you guys is because I wanted to talk about the what if scenario. What if the merger doesn't go through? Now, I don't want to be negative or anything, but you also have to consider that this is still a rumor and no confirmations have been made yet. So before you go on and dislike this video, just stay a while and listen. So let's dig into this article. But while shares have more than doubled on the news, said deal isn't set in stone. Since hitting prices topping $27.30 per share, CCIV stock pulled back as concerns mount its potential game-changing deal could get delayed, or worse, not happen at all. Those who got in CCIV early are sitting on some nice gains. But for those who didn't get in early, is it too late to profit from this opportunity? And this is the question that a lot of people should be asking themselves. Is it really too late to start investing into CCIV? Well, in my personal opinion, if you really believe that this merger is going to happen and you believe that Lucid Motors is going to be a successful company, I don't think it's ever too late to invest. Because if you think about it, Tesla is sitting at a price tag of almost $900 per share. It would be an investor's dream for Tesla to be at a price tag of $30 again, because they would have the opportunity to purchase stocks from a successful company. But obviously, it would be a nightmare for investors who hold Tesla stocks, because they don't want to see $800 drop all the way down to $30. But it would benefit new investors. However, I'm not a financial advisor, so this is just my personal opinion. So let's go ahead and keep reading. Churchill has neither confirmed nor denied it's in talks to buy this early stage luxury EV maker. But with some starting to cast doubt, let's assess the odds of this deal getting delayed and or not happening. First, a delay is possible, given recent developments related to Lucid's largest shareholder, Public Investment Fund, owns 67% of the privately held EV maker. That alone doesn't impact the chances a deal goes through. The PIF has expressed interest in taking this company public, whether via the traditional route and through a SPAC merger. Now this is where it gets interesting. But with PIF looking to have Lucid build a production facility in the Saudi city of Jeddah, this may push the much discussed possible deal onto the back burner. For those looking to profit on CCIV stock, this may not be the worst thing in the world. Why? If the deal takes months longer than expected, impatient speculators could start exiting positions. If shares fall back to around $15 per share, a more attractive entry point could emerge. So this is where the patient game comes in. This is exactly where you should ask yourself, are you a short-term investor or are you a long-term investor? Are you willing to wait for a long time for this merger to actually get announced, if it ever does get announced? Or do you want to use your money in some other investment? I consider myself a long-term investor, so I will be holding this for a long time. Even when the merger does get announced, I'll probably hold it for another 5 to 10 years, or even longer. So once again, this is a question that you should ask yourself. But anyway, let's move on to the next topic. A daily cover story was published on February 4th, 2021 at 6:30 in the morning. It was brought to us by Forbes. The headline of this story states, Elon Musk as chief engineer creates a new car and says it beats Tesla. I wonder what company they're talking about. So out of this whole cover story, I will be talking about only 3 points. My first point can actually be found in the subtitle here. The $169,000 Lucid Air is coming this spring, and Peter Rawlinson claims it will be the fastest, longest range electric vehicle on the planet. He should know. A decade ago, he engineered the Tesla Model S. The reason I'm bringing this up is because every single Lucid investor wants this company to succeed, and also wants Lucid to be the biggest competitor that Tesla has ever seen, because that means more profit for all of us. So let me go ahead and read this really quickly. Peter Rawlinson has many goals for the Lucid Air. One is that it be hailed as the world's best electric car. Nobody believes me, but we're about to take it to another level, says Peter Rawlinson. It's the same feeling he had a decade ago as a chief engineer for Tesla Model S, the breakthrough all-electric car that took the auto world by storm in 2012. No one believed me with the Model S. The hostility to it was shocking. I found the same with the Air. No one believes it. The Dream Edition of the Air certainly seems set to wow. It tops the S with an industry-leading 517 miles per charge, faster recharging, and the ability to go from 0 to 60 in just over 2 seconds. The delivery of the Lucid Air is scheduled for spring 2021, so it's safe to say that Lucid's ready to take on the world, especially their biggest competitor, Tesla. Now moving on to my second point. Within 5 years, Rawlinson wants to be selling hundreds of thousands of mid-$40,000 electric cars and helping big automakers sell $25,000 mass-market EVs, the very same objective that his old boss, Elon Musk, is chasing. So what does this mean to all Lucid investors? This means that Lucid Motors will be manufacturing more vehicles, selling more vehicles, and giving us more profits. In addition, Lucid is also planning to manufacture a more affordable car, just like Tesla did with the Model 3. So I wanted to read this paragraph before I end my second point. Already, the new US president has signed orders pushing the federal government to replace fossil fuel vehicles with electrics, a government fleet totaling hundreds of thousands of cars and trucks. Biden has promised to build thousands of new public EV charging stations. And federal incentives for EV purchases that were lapsing under Trump are expected to be revived. So this is wonderful news for all Lucid investors, as more electric vehicles will be sold, meaning more profits for all of us. So the last point that I want to talk about is when Peter Rawlinson brings up the SPAC topic. And this conversation can be found in this paragraph. For now, the private Newark, California-based company is paying for Air's development and production with a $1.3 billion investment in 2018 from Saudi Arabia's Public Investment Fund. That's on top of the $150 million the company had previously raised. PitchBook values the company at $15 billion. But making cars is expensive, and Rawlinson knows that he has to find even more money and is looking to list shares publicly, possibly via SPAC. Though he previously considered a SPAC a dirty word, that's changed. That was the financiers' view. That was the Wall Street's view of SPACs not so long ago. I think I would say what a difference a year makes, he says, without confirming a specific plan. So we finally get some sort of confirmation from the man himself that he's not afraid of considering a SPAC. Could the SPAC potentially be CCIV? Well, who knows? I'm not sure. But I did find something really interesting that was tweeted by the author of this article. I was actually made aware of this finding by Alex Cudler's tweet. So it states here that the interview of Peter Rawlinson took place on December 18th and January 13th. And it also got me thinking almost the same thing that Alex Cudler said on this tweet. The timing of events is highly suspicious. The Wall Street Journal article, Walter Bloomberg posting inaccurate articles, the $23 million buy order on the major dip, and finally, Forbes decides to release their article on Lucid after interviewing Rawlinson in December and January. Does this sound really suspicious to you guys? Let me know what you think in the comments below. Oh yeah, one more thing. As I was finishing this video, Alex Cudler came out with a new tweet. CCV to come online February 5th, which is tomorrow. Remember what I've said in the past. When a company issues a new SPAC, this usually means they are close to closing out the previous one. Now, I don't know much about SPACs, but it sort of makes sense, I guess. The source that he has listed on the bottom is this one. Churchill Capital Corp. V announces a separate trading of its Class A common stock and warrants commencing February 5th, 2021. So let me know what you guys think about this. Could this mean that CCIV is closing down on the merger soon? Let me know your thoughts in the comment section below. But anyways, thank you guys for joining me in this crazy roller coaster. It definitely makes me feel like I'm not alone in this crazy ride. As always, the sources are listed in the description below. And since you're down there already, please make sure to leave a like if you enjoyed the video. And if you want to see more of my videos, then please go ahead and subscribe and hit the bell for notifications. But as always, please don't forget to be patient as we are getting really close to finding out the truth about this merger. And don't forget to take a chance.